Hello, and welcome to Lesson 19 of the MASUDA ASI introductory course. In this lesson, we'll be talking about the Masuda ratio. Now, until now, we have looked at the 6-color pattern classification and also the 6-color spectrum based off that. And the way we get the spectrum is by clicking this button here at the bottom right of the screen. That brings up the 6-color spectrum for the Nikkei 225 index. The Nikkei 225 comprising 225 stocks. On the top half of the chart we have the Masuda ASI chart here, also showing the actual Nikkei 225 index. And just to recap briefly, the 6 colors were white being the F pattern, this is the end of the decline, yellow being the A pattern, this is the initial rise, and B being the green pattern B, which is the uptrend. This is the mature uptrend, the best of all of the patterns. Now these 3 colors, white, yellow, green, FAB, these comprise the 3 uptrending colors. The other colors in the 6 are the C pattern, which is red, this is the end of the rise, the blue, dark blue, which is the D pattern, this is the initial decline, and the gray, which is defined as black, this is the E pattern. This is the worst of all of the 6 color patterns. So we have C, D, E being the 3 downtrending patterns. One of the other key points that we mentioned in the previous couple of lessons was that the boundary here between the green zone and the red zone is very important, because this, you can see at a glance whether the number of stocks in the index, the uptrending stocks, are rising or declining. Because the green boundary encompasses FAB, the white, yellow and green 3 uptrending pattern stock group, any increase in this green boundary means that the number of uptrending stocks in the index is increasing. And conversely, if this actually declines, which means the downtrending stock patterns are gaining in momentum, then obviously it's the opposite. We can draw a basic line to follow this up. You can see here that the number of uptrending stocks is increasing. And typically we would expect that the index would rise as well in such a scenario. In this case, the number of uptrending stocks has fallen off sharply, which is also evidenced by the index falling off here. Here we have a sharp burst, and you can see that the number of uptrending stocks has gained quite quickly here, but also falls off sharply again. So this is one of the key ways to interpret the 6-color spectrum at a glance, was the boundary between the green and the red zones. When we looked at the 6-color spectrum previously, we also noted that at the top here we have several percentage numbers. The percentage of white pattern or F pattern stocks, the percentage of A pattern stocks, and the percentage of B pattern stocks. These 3 aggregated equals the uptrending stock group. And so you can see 5.8 plus 0.9 plus 3.6% equals 10.3%. On the other hand, we have the 3 downtrending pattern stocks, 1.8% for C pattern, 5.3% for D pattern, 82.7% for the E pattern. Aggregated, we get 89.8%. Now, we'll move the white basis line to this point where we had a peak in the uptrending pattern stocks, and you can see at this time that 83.4% of all of the stocks in the Nikkei 225 were in an uptrending pattern, which is they were either white or yellow or green. Now, this number at first seems to be quite large, that there's a lot of uptrending stocks, but let's have a look at this point in time. This is back to the 9th of March. We have a very similar number of uptrending stocks in total, but even if you just look at the chart alone, you can see that in this case here, and back in March, we have few F pattern or white pattern stocks, a few yellow pattern or A pattern stocks, and several green pattern, B pattern stocks. If you look at the numbers here, 20.4, 15.1, and 48% of B pattern, green pattern stocks, making up the 83.5%. Whereas back here, as of the 23rd of June, we have the bulk being white F pattern stocks, so 57.4%, 17.5 A pattern stocks, and only 8.5% of green B pattern stocks, making up the same approximate 83 or so percent of uptrending stocks. Now, what is the significance of this? Well, let's take a closer look. And to take a closer look, let's read the 6-color spectrum down the bottom at the same time as looking at the Masuda Ashi chart for the Nikkei 225 index at the top as well. Here is the first point. You can see the white basis line coming up here. Now, the pattern of the short-term Masuda Ashi line for the index had a sharp rise quickly and then followed by a sharp decline, which basically mirrors this kind of shape in the 6-color spectrum. However, if we go back to our March date here, when we had the 83.5% of uptrending stocks, you can see that this comes at the beginning of what turns out to be a much stronger medium to longer term uptrend in the index. So whereas this marks the beginning of a rise, the other point that we were just looking at now marks a peak to be followed by a sharp decline. So even though we have the same number of uptrending stocks in our 6-color spectrum, not all uptrend numbers are the same. We can see that as we looked at the numbers before, the composition of each of these total uptrending stock numbers is quite different. And you must remember as well, even though the white F pattern is an uptrending pattern, it represents the end of a decline. So it's a shift from the worst E pattern into the F pattern. So it's basically saying it looks like the decline could be coming to an end, bottoming out, and we would hope for a rise hereafter. But in this case, where we have a huge component of mostly white F pattern stocks, this is a time for caution because it's not necessarily a sustainable rebound. We would need to see more green B pattern stocks, as in this case, which would signify a more mature uptrend. Now, just to recap, this may all seem quite complicated at first. Remember, this is all based on the 6-color pattern classification. We have the 3 Masuda Ashi real body lines that we read in combination, the short-term line, the medium-term line, and the long-term line. And the relative positioning of each of these lines, there are 6 combinations possible, and in the Masuda Ashi chart system, each of these pattern combinations is assigned a color and an alphabet letter. Now, in order to use this 6-color pattern classification and analyze the inner workings of an index more closely, the 6-color spectrum was developed. This gives an aggregation of the 6-color pattern classification for each single stock in an index and aggregates all the F pattern, A, B, C, D, E pattern stocks together to give us this kind of distribution. And in order to make the interpretation and the reading of the 6-color spectrum even more easier, the Masuda ratio was developed. That is the main topic of today's lesson, the Masuda ratio. So just to remind you of the progression, first of all, we have the 3 Masuda Ashi real body lines. The relative positioning of each of these lines in relation to each other results in a combination of 6 different patterns. Each pattern is assigned a color and an alphabet letter. These patterns are then used as the basis of a distribution forming the 6-color spectrum for all of the individual stocks in an index. And from this, the Masuda ratio was developed to make the interpretation of the 6-color spectrum even easier.